It is a deadly virus, but if you kill the economy, it will kill even more people. China has already come back to work, which is a very positive sign. Think about 10 years perspective. What has changed? I added Tesla stock to my portfolio last week. My shares are up now around 50%. The last month has been harsh for stock market investors. But yesterday's stock market session brought some hope for the future of the economy and investors' money. We are going to experience a recession in the first and second quarter of 2020. But is the economy going to recover in the coming quarters? The stock market is discounting the future, so it should give us hints on the direction going forward. In terms of stock market investments, Warren Buffett taught us to not buy or sell businesses based on today's headlines. You should buy stock based on how they're likely to perform over the next decade and beyond. Watch the video to find out if that is the right moment to buy stocks and what is my investment plan going forward. The first half of the year is not going to be positive in terms of economic activity. With locking down the economy, many businesses will go bankrupt. That will result in millions of people losing their jobs. Politicians have tough decisions to make now. It is a deadly virus, but if you kill the economy, it will kill even more people. You will not fix the economy quickly by putting a large sum of money into circulation. If the consumer spending decreases because of the worry about the future, it is challenging to bring the economy back on track. Media's activity, which focuses on negative news, is the reason for the panic. I can bet that if there were counters of death for regular flu and it spread, everyone would panic too. I wonder if people are aware that each day more than 3,000 people die in road crashes. It does not stop people from driving, and it does not force politicians to lock down the economy. But let's move into the good news. The Dow Jones Industrial Average soared on Tuesday more than 11%, notching its biggest one-day percentage gain since 1933. The S&P 500 rallied 9.4%, which was its best day since October 2008. Apple went up by 10%, Facebook went up by almost 9%, Tesla skyrocketed 16%, and PayPal experienced growth of its share price by 14%. What made investors changing their sentiment? There are a few reasons. Investors are happy with a stimulus bill to rescue the economy from the damage related to the shutdowns. Also, President Donald Trump signaled he was eager to reopen the economy by Easter. Of course, it will depend on how well the containment of the spread of the sickness goes. But do you know what will not spread the virus? Smashing the like button when staying indoors. So what are you waiting for? China has already come back to work, which is a very positive sign. At the beginning of April, we should be able to see their economic indicators, GDP growth and unemployment numbers. This video from my friend's YouTube channel about life in China shows that the panic is over and people came back to enjoying life. I'm not saying that we will come back to the levels before the stock market crashed quickly, but companies with good prospects should be close to their all-time high levels quite soon. I do not see reasons for stocks of Facebook and Alphabet, which is the parent company of Google, to stay too long on the low level. Of course, advertisers will experience lower levels of spending on ads because some businesses do not operate now. That is especially the case for the travel industry. Travels are the last thing people care about now. Managers of retailer companies will focus their growth on their online channels. They may want to spend more money on online advertising for redirecting people to their online shops. The risk here is that if people do not leave their houses, they do not care too much about wearing fancy new jeans or a jacket. But this boost of thinking about selling more online instead of on the high street should be good news for the big online advertising companies in the long term. Both Facebook and Alphabet are well positioned to thrive in the aftermath of this pandemic with plenty of cash on their balance sheets, which can make these companies feeling really safe during a worse period in the first half of this year. They can also deploy their massive cash holdings on acquisitions of discounted businesses. I told you in this video, which I published a month ago, that the gaming industry was the one which should benefit from people staying indoors. I was right. They were good choices. My gaming companies are very close to their all-time highs, and I expect that as the lockdown period continues, their businesses will prosper. People play more games when they stay indoors. And the second aspect is that employees of the game companies can work from home, so the new productions are not going to experience too much of a slowdown. People in China experience reduced pollution because of less economic activity and fewer cars on roads. That may convince more and more people to transition to electric vehicles. Tesla company should benefit from that in the long term. Of course, the car industry will be affected negatively in the short term with fewer sales. However, as I said in the previous video, I am the least worried about Tesla from all auto manufacturers. I added Tesla stock to my portfolio last week. My shares are up now around 50%. To be honest, I did not think that my buying transaction is going to affect the stock market of Tesla so much. It looks like some big investment banks are watching this YouTube channel and copying my investment moves. I need to be more cautious about my decisions. Another positive effect of lockdowns all around the world is that people will learn to work from home more efficiently, and they will want to do it more often. That should reduce pollution from their cars later when the economy is back on track. The current situation is a difficult one. Many people are going to die from the virus. On the other hand, the restrictions will cause negative effects too. Business owners will bankrupt, and many people will lose their jobs, potentially also lose their houses. It is not easy to balance these two aspects. Goldman Sachs has already warned that the United States GDP will shrink 29% by the end of the second quarter of 2020, and the unemployment may skyrocket to at least 9%. We do not see the virus going away yet, but the solution implemented in China seems to have a good effect. The spread of the virus has been reduced. I expect to see the same impact in other parts of the world. Implementation of social distancing will allow coming back to normal activities after some time of the lockdown. Much more difficult task is to reintroduce the confidence among people and stop the panic. I hope that social distancing will not have a sustained impact on the economy. As we could see from the history, previous world pandemics did not stop us from traveling or shopping. This time is slightly different because the panic has been spread much wider, with people following every news through television and the internet. That is also the cause of the panic on the stock markets being quicker and deeper. The 2020 stock market crash is the quickest ever drop from the all-time highs levels. So what should be the strategy? If possible, make sure you have 3 to 6 months of living expenses on hand. If you have excess cash on hand, investing in stocks isn't a bad idea, because prices are low. I do not expect that the whole stock market will go up so quickly as it went down. We might stay at the current low levels for some time. And as we will hear more positive news about containing the virus and the economy being back on its two legs, the stock market should slowly climb up again. No one knows when it will happen, but if you are a long-term investor, the prices now are much more attractive than just 2 months ago. The market is still heavily down, and for some companies there are reasons for it. But you can find businesses which will not be negatively impacted or even can benefit from the current situation. Think about 10 years perspective. What has changed? Let me know what your strategy is. Have you been buying or selling shares in the first quarter of this year? Comment below and share your investment ideas. If you enjoyed this video, make sure to subscribe and click the bell to receive a notification about a new video being published. Or feel free to add me on Instagram, Stocks and Freedom. Thank you so much for watching, and until next time, happy investing!